Friends, thank you for being here today. What if I told you that Canada's economy is growing, but you are getting poorer? Not metaphorically poor, not it feels that way poor. Mathematically, algorithmically, inescapably poor every single quarter. While the government celebrates expansion, your slice of the national wealth is shrinking. This is not a conspiracy. This is arithmetic, and the numbers don't lie. Let me give you a number so staggering it will reframe everything you think you know about economic growth. Canada's real GDP per capita growth over the last decade has averaged 0.8% per year. That is the lowest sustained growth rate since the 1930s, the Great Depression. We are living through a structural impoverishment of the middle class that rivals the worst economic collapse in modern history. But it's been hidden by a single trick. We keep adding more people to the equation. Here's the mathematical reality that no politician will explain to you. Population is growing at 3% per year, the highest rate in Canadian history. GDP, total output, is growing at roughly 1%. When the bottom number of a fraction grows 3 times faster than the top number, your share of that wealth must shrink. It is not a policy choice. It is not a political opinion. It is an inescapable mathematical endgame. We are witnessing what I call the numerator crisis, a structural fault line where the denominator of our prosperity equation is exploding while the numerator barely moves. This is not a correction. This is not a downturn. This is a singular inevitability that was baked into the system the moment we chose population growth over productivity growth. And the window to understand what's happening, to prepare for what comes next, is closing in real time. Let me take you back to where this tragedy began, because the current crisis is not an accident. It is the final act of a deliberate strategy shift that happened between 2015 and 2023. For decades, Canada's economic model was built on a simple premise: make things better, increase productivity, invest in capital, in machinery, in technology, in education, give each worker better tools so they could produce more value per hour. That was the old playbook. Productivity growth. It's how nations become wealthy. But something changed in the mid-2010s. The government looked at sluggish GDP numbers and made a fateful choice. Instead of fixing productivity, which is hard and takes years, they decided to juice the GDP numbers with a shortcut: add more people, import more consumers, treat labor like a commodity. The logic was seductive in its simplicity. If one worker produces X dollars of GDP, then 2 workers produce 2X. Scale the population, scale the output, the economy grows, the headlines look good, politicians win elections. But they forgot something critical. They forgot that people are not just producers. They are also consumers. They need houses. They need roads. They need hospitals and schools and infrastructure. And most importantly, they need capital to be productive. A worker without machinery is just a person with hands. A programmer without a computer is just someone who knows syntax. An engineer without equipment is just theory. We added the workers, but not the tools. We stuffed the economy with bodies and forgot to give them the soup. Let me explain what happens when you make this mistake, because it is the big secret of the entire system, the mechanism that is vaporizing your standard of living right now. Economists call it capital dilution, but I call it the diluted soup. Imagine a soup kitchen with one large pot of soup. That pot represents the capital stock of the nation. Every machine, every factory, every piece of technology, every tool that makes labor productive. Now imagine a line of people waiting for soup. That line represents the workforce. If you double the line of people but don't add more soup, what happens? Everyone gets a thinner bowl. That is exactly what Canada has done. We have doubled the workforce through immigration, but business investment per worker has been falling. We are forcing more workers to share fewer machines. The result is predictable and devastating. Wages stagnate. Output per hour declines. productivity crumbles. Each worker becomes less valuable because they have less capital to work with. And here's the part that should terrify you. The government knows this is a trap. That's why in late 2024 and 2025, they suddenly started talking about recalibrating immigration targets. They realized that the growth Ponzi requires exponential acceleration to survive. You can't just add 3% more people every year indefinitely. At some point, you hit the physical limits of housing stock, infrastructure capacity, and social cohesion. The soup pot is empty, the kitchen is full, and the system snaps. This leads us to the system's most crucial secret, which we will explore in a moment. But first, understand this. What you are experiencing right now is not bad luck. It is not a temporary setback. It is the inevitable result of a government choosing to inflate the denominator instead of growing the numerator. They chose the illusion of growth over the reality of prosperity, and you are paying the price. Now, let me show you exactly how this is playing out in real time, because the evidence is everywhere if you know where to look. The trigger event is not a single moment. It is a sustained, relentless downward repricing of Canadian life that has been underway for years. Real GDP per capita has been below its pre-pandemic baseline for 8 consecutive quarters as of late 2025. Not one quarter, not two, 8. This is not a dip. This is a structural collapse of living standards. Let me give you the canaries in the coal mine, the specific forensic evidence that proves the rot is real. First, look at youth unemployment. Young people ages 15 to 24 are experiencing an unemployment rate of 13.3% as of late 2025. Why? Because the growth Ponzi uses young immigrants as fuel. And when you flood the labor market with new entrants, you displace the domestic youth. Entry-level jobs vanish. Internships disappear. A generation of young Canadians cannot start careers because the system is optimized for population throughput, not opportunity creation. This is the lost generation, sacrificed on the altar of GDP optics. Second, look at the retail recession. This one is particularly insidious because it defies surface logic. Retail sales volume is falling despite millions of new shoppers being added to the economy. How is that possible? Because per capita spending on goods is collapsing. People are cutting back on essentials. They are buying less food, less clothing, less of everything because their slice of the national pie is smaller. You see crowded malls and assume business is booming, but crowding is not wealth. Crowding is inefficiency. Those crowds are just more people fighting over a shrinking pool of purchasing power. Third, and this is the one that should keep you awake at night, look at the productivity gap. Canadian labor productivity is now just 71% of the US level. 71%. We are working harder, longer hours for less money than our neighbors to the south. And the gap is widening. Every year, the divergence grows. In the year 2000, US and Canadian GDP per capita were roughly comparable. Today, the United States is 40 to 50% richer per person. The average American has $92,000 of GDP per capita. The average Canadian has approximately $58,000. We are not just falling behind, we are being lapped. Let me connect the dots here, because this is where the illusion meets reality. You might be asking yourself, if the economy is growing at 1%, why does it feel like we're in a recession? The answer is that aggregate growth and individual prosperity are not the same thing. The country is getting richer in total because we are adding millions of people. But you, the individual, are getting poorer because the pie is not growing fast enough to feed them all. This is zombie growth. Growth that exists on paper but is not felt by the citizens. Growth that serves the statistics but not the people. And here is where it gets truly diabolical, friends. The government has trapped itself in a corner and they know it. They are facing what I call the no escape encirclement, a situation where every possible move leads to disaster. Let me walk you through the math of their nightmare, because understanding their trap is the key to understanding your future. Option A, cut immigration, reduce the population growth rate back to historical norms, maybe 1% or less. What happens? GDP immediately turns negative. When 3% of your growth comes from adding bodies and you remove those bodies, you are left with negative 2% growth from productivity. That is a technical recession. Headlines scream crisis. But worse than the headlines, the housing market implodes. Canada's real estate prices are built on a foundation of perpetual demand growth. Remove the new buyers and the entire edifice crumbles. Homeowners see their wealth evaporate. Banks holding mortgage portfolios face cascading defaults. The financial system itself becomes unstable. Option B, keep immigration high. Maintain the 3% population growth to prop up GDP and housing prices. What happens? GDP per capita continues its freefall. The standard of living keeps collapsing. Every quarter, Canadians get poorer in real terms. Infrastructure buckles under the weight. Hospitals overflow. Schools become overcrowded. Traffic becomes gridlock. Social cohesion fractures. You get the appearance of growth with the reality of decline. The numerator crisis accelerates. So what does the government choose? They choose option B every single time, because option B protects asset prices. It protects the wealth of homeowners, the portfolios of pension funds, the balance sheets of banks. It sacrifices your quality of life to protect the financial scaffolding of the system. This is not a conspiracy. This is stated policy. They have made the calculation that it is better for you to be poorer than for the housing market to crash. And they are betting you won't notice because you'll be distracted by the illusion of activity, the crowded streets, the busy airports, the rising home prices in major cities. But the illusion is cracking, and the cracks are turning into fault lines. Let me show you the evidence that is already appearing, the signals that the Ponzi is reaching its mathematical limit. First, there is the brain drain. High-value workers, the engineers, the programmers, the doctors, the entrepreneurs are leaving Canada for the United States in record numbers. Why? Because they can make 40 to 50% more money doing the exact same job across the border. When your productivity is 71% of US levels, your wages eventually reflect that gap. Talented people are not stupid. They do the math. They realize that their human capital is worth more in a system that invests in productivity rather than population. This creates a vicious cycle. The people who leave are the very people who drive innovation, who create new businesses, who generate high-value output. Their departure makes the productivity problem worse, which makes the wage gap wider, which causes more people to leave. It is a doom loop, and it is already spinning. Every software engineer who moves to Silicon Valley, every doctor who relocates to Texas, every entrepreneur who incorporates in Delaware is a piece of the numerator that Canada loses forever. We are hemorrhaging our productive capacity while importing low-wage labor to fill the gaps. That is not a sustainable model. That is managed decline. Second, there is what I call capital shallowing, the technical term for having less equipment per worker. Business investment in Canada has been anemic for years. Companies are not buying new machinery. They are not upgrading technology. They are not investing in automation or AI or advanced manufacturing. Why would they? When labor is cheap and abundant, there is no incentive to invest in capital. You just hire more people, but those people without tools produce less per hour, and when they produce less per hour, they earn less, And when they earn less, they spend less, and the economy stagnates. The data on this is unambiguous. Investment per worker has been declining for over a decade. We are one of the only developed nations where capital stock per worker is actually falling. Think about what that means. Every other wealthy country is giving their workers better tools, more technology, more support to be productive. Canada is doing the opposite. We are regressing. We are moving backwards toward a labor-intensive, low productivity model that resembles developing economies more than advanced ones. This is the population trap in action. When population grows so fast that all savings and investment go to maintaining infrastructure, building houses, and expanding services, there is nothing left for innovation. The system consumes itself just to stand still. Third, and this is the smoking gun, look at what is happening to the Canadian dollar. A country with falling per capita productivity will eventually have a falling currency. It is a law of economics as reliable as gravity. Your currency is a claim on your productive capacity. If that capacity is shrinking per person, the value of each claim must decline. The loonie has been on a slow, grinding descent for years, and the trajectory is clear. As the productivity gap with the United States widens, the currency gap will widen with it. This has already begun. And when the currency falls, everything imported becomes more expensive. Food, energy, technology, medicine, anything that crosses the border gets repriced higher in Canadian dollar terms. Let me paint you the full picture of what this convergence looks like, because we are not dealing with one problem. We are dealing with a trifecta of structural forces hitting simultaneously. Force number one, 3% population growth, the highest in Canadian history, diluting capital and suppressing wages. Force number two, negative productivity growth, meaning output per hour worked is actually declining, making each worker less valuable over time. Force number three, a brain drain of high-value talent to the United States, seeking the 40% pay premium that productivity difference creates. These three forces together create a doom spiral. Population growth without productivity growth creates poverty. Poverty creates brain drain. Brain drain reduces productivity further, and the cycle accelerates. This is not a recession that ends in 2 years. This is a structural repricing of what it means to be Canadian. The standard of living you enjoyed in 2015 is gone. The economic mobility your parents had is gone. The promise that each generation will be richer than the last is broken, and the government's response is to add more people to mask the decline. Now, I need to talk to you about your own mind for a moment, because the greatest threat you face is not external. It is internal. It is your psychology. Human beings are hardwired to believe tomorrow will look like yesterday. This is called normalcy bias, and it is the reason most people will not prepare for what is coming. You look at your life, and it seems mostly normal. You still have a job. You still pay your bills. Yes, things are more expensive, but you adjust. You cut back a little, you make do. The changes are gradual enough that you adapt without realizing you are adapting to decline. But here is what you need to understand. You are experiencing the wealth illusion in real time. You see traffic jams and think the economy must be strong. You see crowded shopping centers and assume business is good. You see high home prices and believe you are getting wealthier. But none of that is wealth. That is overcrowding. Traffic jams mean infrastructure cannot handle the population. Crowded malls mean more people are competing for the same goods. High home prices mean you are being priced out of shelter. These are symptoms of dysfunction, not prosperity. Crowding is not wealth, it is inefficiency. Let me give you another way to think about this, because the money illusion is particularly dangerous right now. Your salary might stay the same or even go up slightly. On paper, you are making more money, but at the grocery store, at the gas station, at the pharmacy, you are buying less with that money. Your nominal wealth increases while your real wealth declines. You become a millionaire on paper, but poorer at the checkout counter. This is the trap of a system that prioritizes population growth over productivity growth. The numbers go up, but the value goes down. And here is the most insidious part. The government will celebrate every uptick in GDP. They will point to the positive growth rate. They will tell you the economy is expanding. And technically, they are correct. The total size of the economy is larger. But you, the individual citizen, are not the economy. You are one person in a sea of millions. And your share of that growing economy is shrinking every single quarter. The pie is getting bigger, but your slice is getting smaller. That is the mathematics of the growth Ponzi, and it is vanishing your prosperity in real time. Friends, we need to talk about what happens next, because understanding the trap is not enough. You need to understand the choice in front of you, and it is a binary choice. There is no middle ground. There is no wait and see. The liquidity tide is going out, and we are about to find out who is swimming naked. The government is locked into option B. They will continue high immigration because the alternative is immediate financial crisis. They have made their choice. They will sacrifice your standard of living to prevent a housing crash. They will dilute your share of national wealth to maintain the appearance of growth. This is not speculation. This is observable reality. Every policy decision, every immigration target, every fiscal measure confirms this trajectory. They are committed to the Ponzi because stopping it would reveal the underlying insolvency. But here is what they cannot control. Here is the variable that will break the system regardless of their choices. Productivity cannot stay suppressed forever while the rest of the world advances. The gap between Canadian productivity and U.S. productivity is not static. It is widening. Every year, American workers get better tools, more technology, more capital support. Every year, Canadian workers fall further behind. That gap creates pressure. Economic pressure, social pressure, political pressure, and pressure finds release. It always does. Sometimes that release is gradual, a slow erosion that people adapt to over decades. But sometimes when the pressure builds fast enough, the release is sudden, catastrophic, the scaffolding snaps. Let me tell you what the snap looks like, because the pattern is visible in history. When a country runs a growth Ponzi, when it prioritizes population over productivity, when it dilutes capital and suppresses wages, three things happen in sequence. First, talent leaves. The brain drain accelerates until it becomes a hemorrhage. The best and brightest abandon ship because the economic incentives make staying irrational. This is already happening. Tech workers are fleeing to Seattle and San Francisco. Doctors are moving to states with better compensation. Entrepreneurs are incorporating in Delaware and Austin. Every month, thousands of high-value Canadians are making the calculation that their future is elsewhere, and each one who leaves takes their tax revenue, their innovation capacity, their economic contribution with them. Second, currency collapses, not all at once, not in a single day of panic, but in a grinding, relentless devaluation that makes everything imported more expensive. Food costs rise, energy costs rise, technology costs rise. Anything that crosses the border gets repriced. And because Canada imports a massive portion of what it consumes, that currency decline translates directly into inflation. Not the inflation caused by too much money chasing too few goods. The inflation caused by your money being worth less on global markets. This is a default in all but name. Your purchasing power is being confiscated by arithmetic. Third, and this is the end game, political instability erupts. When people cannot afford housing, cannot find jobs, cannot maintain the standard of living they were promised, they demand change. They vote for outsiders. They embrace populism. They tear down the existing system because the existing system has failed them. This is not a moral judgment. This is pattern recognition. It happened in Argentina. It happened in Venezuela. It happened in Lebanon. Countries that ran population-based growth models without productivity to back them up eventually hit a wall where the math stops working and the society fractures. Canada is on that path right now. The only question is how far down the road we are. And friends, I believe we are closer to the wall than most people realize. The 8 consecutive quarters of declining GDP per capita is not a blip. It is a trend. The youth unemployment at 13.3% is not temporary. It is structural. The productivity gap at 71% of U.S. levels is not closing. It is widening. These are not problems that fix themselves. These are fault lines that deepen until they break. So what do? What is the action in a system that is mathematically designed to impoverish you? Let me be very clear about this. You cannot wait for the government to fix productivity. They have had 40 years to fix it, and they have failed. Productivity growth requires long-term thinking, political courage, and the willingness to make unpopular choices. It requires investing in education, infrastructure, technology, research. It requires creating an environment where businesses want to invest capital rather than just hire cheap labor. None of that is happening. None of that is even being discussed seriously. Your only rational move is to build what I call your personal GDP. Stop thinking like a citizen of Canada and start thinking like a corporation. Corporations do not tie their fate to a single jurisdiction. They diversify. They allocate resources across borders. They move capital to where it generates the highest return. You need to do the same. You need to separate your economic fate from the Canadian economic trajectory. What does that look like in practice? It means owning assets that are not denominated in Canadian dollars, U.S. equities, U.S. real estate, hard assets like gold and silver that cannot be diluted by population growth or currency debasement. It means developing skills that are portable across borders, so if you need to leave, you can. It means understanding that the social contract you were promised, the idea that working hard and playing by the rules would guarantee prosperity, has been broken, not by malice, but by mathematics. The system cannot deliver on that promise anymore because the math does not work. Let me address the elephant in the room because some of you are thinking it. Gold, silver, hard assets. Is this just fear-mongering to sell precious metals? Let me answer that with a question. Do you own assets or claims on assets? Your stocks, your ETFs, your retirement accounts, those are claims. They are paper promises backed by the productivity of companies operating in economies. If those economies are experiencing structural decline in per capita terms, what are those claims worth? If Canadian productivity keeps falling, Canadian companies become less valuable. If the Canadian dollar keeps weakening, your dollar-denominated assets lose purchasing power, even if their nominal value stays the same. The gold and silver are not investments. They are insurance. They are a way of stepping out of the line of fire. When you hold physical gold, you are not exposed to the productivity crisis. You are not exposed to currency debasement. You are not exposed to the growth Ponzi. You own something that has value independent of government policy, independent of population growth, independent of the numerator crisis. That is not speculation. That is preservation. And in a system where the mathematical endgame is the destruction of purchasing power, preservation is the only rational strategy. But here is what I really want you to understand, friends. This is not about getting rich. This is about not getting poor. The game has changed. For 50 years, the Canadian model was get an education, get a job, buy a house, save for retirement, and you will be comfortable. That model is dead. It died when the government chose population over productivity. It died when they decided your standard of living was an acceptable sacrifice to keep GDP headlines positive. It died when they trapped themselves in a Ponzi scheme that requires perpetual acceleration to survive. The new reality is this: you are on your own. The system will not protect you. The government will not save you. Your job will not guarantee prosperity. Your house might not appreciate in real terms, even if the nominal price goes up. Your retirement savings might lose half their purchasing power over the next decade. These are not doomsday predictions. These are mathematical projections based on observable trends. GDP per capita falling for 8 straight quarters. Productivity at 71% of US levels. Population growing at 3% while GDP grows at 1%. The math is clear. The outcome is inevitable. So you face a choice. You can believe the government's narrative that the economy is growing and everything is fine. You can trust that they will somehow fix productivity after 40 years of failure. You can hope that the trend reverses itself without intervention. That is one choice. It is the choice most people will make because it requires no action, no discomfort, no confrontation with uncomfortable truths. Or you can accept the mathematical reality. You can recognize that you are living through a structural impoverishment event disguised as economic growth. You can understand that the 1930s comparison is not hyperbole, it is data. You can build your own resilience independent of the Canadian economic trajectory. You can diversify out of the Canadian dollar. You can acquire hard assets. You can develop portable skills. You can prepare for a future where being Canadian is an economic liability rather than an advantage. History favors the prepared, friends, and the window for preparation is closing, not because of some imminent collapse or single catastrophic event, but because the longer you wait, the more purchasing power you lose, the fewer options you have, the deeper you are trapped in a system that is mathematically designed to make you poorer every single quarter. The growth Ponzi is not a future threat. It is current reality. Your standard of living is being vaporized in real time by the simple arithmetic of population growing faster than productivity. I know this is heavy. I know it challenges everything you have been told about the Canadian economy, but I would rather you be prepared and wrong than unprepared and right. Look at the data yourself. 8 consecutive quarters of declining GDP per capita, youth unemployment at 13.3%, productivity at 71% of US levels, the 1930s comparison, the widening gap with America, the falling currency, the brain drain, the retail recession despite millions of new consumers. These are not opinions, these are facts, and facts do not care about your comfort or your worldview. The simple logic of growth and prosperity does not apply anymore. We are in uncharted territory where the country gets richer while the citizens get poorer, where traffic jams and crowded malls are signs of dysfunction, not success, where your slice of the national wealth shrinks even as the total pie expands. This is the definition of a growth Ponzi, using new entrants to mask the decay of the old system. And like all Ponzi schemes, it works until it doesn't. Thank you for being here today, friends. Thank you for having the courage to look at uncomfortable truths. The decisions you make in the next 12 months will determine whether you are prepared for what comes next or swept away by it. Choose wisely.